Hey friends, welcome. Let's get down to business. So today I'll be going through the Quasimodo pattern, or short, we call it DQM. So basically, what is DQM? Okay, so assuming you have a series of higher highs, higher lows, and higher highs. Okay, so a higher low, you have a higher high, another higher high, another higher low, another higher high. The QM happens when you have the price drop and make a lower low this time. So let's say you have the high here, you have a low, you have a higher high, and then suddenly you have a lower low. Now this QM is just a signal that the price is potentially changing trend. So what happens is that when you trade the QM, you are looking to enter somewhere around here, somewhere along this left shoulder area. So in this case, you want to be looking at this area for the supply zone. So this is a bearish setup. What happens is that when price comes back, we are expecting the price to reject somewhere here and then drop. Okay, so that is the fundamental of the QM setup. So let me just demonstrate to you. Okay, so assuming we have our left shoulder, so what I'll be looking out for is that I'll be looking for a supply zone somewhere here. It can be exactly at the same level, or it can be slightly different. You have the supply zone here, so in this case you will be entering somewhere here and you expect price to reject heavily. Now it can also be a little bit higher. Let's say we put it somewhere here, somewhere a little bit higher up, and then we have to drop. So in this case, our supply zone will be here, just a little bit above the left shoulder. Alternatively, it can be a little bit lower. Let's say we got it somewhere here. We have the supply zone here. So in this case, you want to be entering at this level over here. So when price comes back up, reject, and we go down heavy. Okay, so that is the fundamental of the Quasimodo, and usually you call this at this exact level the Quasimodo level. So Quasimodo level, or you can call it the QML for short. So now there are two types of QMs that you're going to look out for. The first will be the quick retest QM, which I have drawn for you a couple of times now. So expecting the supply zone to be here. Basically, price comes back and tests very quickly before dropping. So this is the quick retest QM. Let me draw this out nicely for you. Okay, so this is the quick retest. Let me change this to something. Let's change it to brown. Okay, this is the quick retest QM. The other one that you see more commonly is the late retest QM. So basically, you have the high, you have the low, higher high, look for the supply zone here, you have a massive drop, and price goes down very heavy, it doesn't come back for a while. So basically what happens is that price leaves the zone for a while. The duration for it to come back is going to take some time. So assuming the price went down heavy, you got an extended period of time before it comes back. So if you compare the difference between the quick retest, so you have the high here, so the duration is very short, but in this case the duration is very long. And maybe along the way you have a fake out, so you have an R1 and you have an R2, and after that price is going to come up a little bit more, maybe make a rising wedge, for example, assuming this is a rising wedge, and finally we drive into our zone and then reject and drop heavy. So the duration, it's really dependent on your time frame, the setup of your time frame. If it is an M30, then the duration could take about a couple of hours. If you're talking about the daily time frame, then the duration can be a couple of weeks to a couple of months. But you should be able to see like the difference between the quick retest and the late retest in terms of the length of this entire setup. So this is the late retest. Okay, so this late retest QM setup and the alternative setup that I have for you before I'm going to go into the example is we may have another resistance here before we have the left shoulder. So perhaps we form a double top. So let's label this 1R and we have the 2R. Before we form the higher high, and then we have the lower low. So this is the 2R setup. This is an alternative to the Quasimodo or the QM. But most importantly, what you are looking out for is that you look out for a lower low. So example, we have a low here. You want to be able to see a lower low here, and obviously we have the higher high to establish our QM. That's very important. So this is the 2R. Let me just delete this and let's make this a little bit less cluttered. Okay, let's shift this back in. Okay, so this is the 2R. Now I'm gonna touch a little bit, very quick, brief on what is the MPL. I think this is a very important price action pattern that you have to learn as well, because it's very powerful, and when you spot one, you have a very high probability setup. So what is the MPL? Basically, we have this here. Okay, so assuming now you have a high, you have a low, you have a higher high. So what I want to see is when price comes back to this QM shoulder over here, I want to call it the QML. What I want to see is that maybe you have a drop or break below this level, and then after that you have a short rejection. Perhaps you form a double top or something like that, and after that you have a little break below and we come back up above this level. So once we come back up, we have a significant drop. Okay, so this is the MPL. What happens if we look closely at this level is that first we form some resistance, right? So we have R here, we have another R, perhaps we have the S, we have the support, and we have another S, we have another support. So in this case, what happens is, imagine you're a scalper or you're someone who's trading on a very short time frame. what happens is when you see the double bottom, what you're going to do is you're going to buy at the support, correct? So what happens when you buy at the support is that price is going to break below, it's going to hunt your stop loss. And those people who see this resistance over here, they see another resistance here, they see another resistance here. So what they're going to do is that they're going to short. They're going to short somewhere here. Let's put this red color. They're going to short at this level. So price comes back, they short. What happens is that they're going to put their stop loss somewhere above. So price pushes above, hunts the stop loss, and then we have the drop. So that is the maximum pain level. What that means is that, imagine if you buy here, you get stopped out. Okay? If you sell, you're wrong as well, you're going to get stopped out here. Before the banks push the price all the way down and have a significant drop. So it takes out all the scalpers here and uses it as liquidity. So what happens is that when the price comes back to this area or this particular level, you have to watch at this level and let's see what happens. So assuming price drops heavy and goes on and do its stuff. So we have a lower low now and all the way down, more lower low here, this mode. Then when price comes back, this is our MPL. And after this, you're going to take this little spike here, you're going to look for a supply zone here. Right? So imagine that we have a spike here and then we have to drop. We want to look for the supply zone here. So assuming we have a green candle and we have a red candle at exactly this level, this is our decision point. So basically what happens is that when price comes back, you want to enter exactly at this level at the decision point. That's where you expect the drop. Okay, very simple, very basic, but to look for it on the charts is a little bit challenging, so you need quite a lot of practice on that. So this is one of my favorite setups. It is the QM combined with the MPL. So we have a high, we have a low, it's a higher high, and after that we have the lower lows here. Lower low, and we have another lower low. Okay, and this is our MPL, maximum pain level. It makes sense, doesn't it? If you're a trader, you buy, you get stopped out, you sell, you also get stopped out, and that's why it's causing maximum pain. Okay, before we move on to our trade over here, I'm going to explain to you the 3 stages of the trade that I always look out for. So first, we look at the past. So the past, we are looking for tricks being played. So in this case, we have Quasimodo. People who bought at this level get stopped out big time, and we have a change in trend. So this is a trick being played in the past. And we have our MPL here, which is also another trick that's been played in the past. Then after that, we are going to look at what I call the process. Some people call it the present. This is the process that price action takes. So the process, we are trying to trap more retail traders. We're going to form a resistance and another resistance. This is our process. We can form a fake out, we can form a tree drive or something like that. It doesn't matter. Usually we look for fake outs. We have R1 and R2, it can be R3 as well. It can be multiple fake outs. It can be an SR flip as well. Maybe this is our support. So perhaps we have price coming up to this support or resistance, and then we have a drop. So we have our level here. This is an SR flip. This is also another form of fake out. Okay, and finally we look at The approach. This is one of the most neglected areas in which traders totally ignore. The approach is also very important because imagine if you were an institution. Yes, you have a lot of liquidity here. You have a lot of retail traders having a stop loss here and they're going to get stopped out. Price drives into the zone. You're going to take out all your stop loss all the way in before dropping. So we have our stop loss cluster. But in the process, it's not enough. We're going to look at approach, because in approach we have more opportunities to track more retail traders. Retail traders are going to short here. They're going to get stopped out. They're going to get stopped out. More buy stops, more breakout traders, more buy stops, and so forth. So the approach is also equally important. In this case, we have a rising wedge. It can be in the form of a last fake out. So maybe we have a fake double top here before we drive into our zone, and then after that we drop heavy. So this is also a very valid approach. So assuming you have R1 and R2 here, but most importantly, we have to look at the approach. How does price approach our supply zone? Assuming right now you have price that drives very quickly into the zone. Imagine it goes like this, like one big bullish candle straight into our zone. I tell you, a lot of times it's going to break our supply zone and usually it will fly up very quickly. So we don't want that to happen, right? We don't want a huge bullish candle straight into our zone. Usually it's going to just violate the zone and price is going to just fly up. You're going to look for a very nice approach. So that is the entire setup. The past, we have a QM and MPL. We look for the process, and finally we have an approach. Let's look at a beautiful setup right here. USDJPY H4. We have a high, we have a low, we have a higher high, we have a spike here, and we have a massive drop. So I want to be looking for where is the start of the move, where is the origin of the move. It might be somewhere here. This might be our area of interest. So let's first mark out the QM level. So I guess in the somewhere here, this is a very beautiful 2R setup. So we have the 1R, and after that we have the 2R. So at this price 112.123, 1R, 2R, which is our high at the same time. Let's put this on caps. Get a high, we got a low, we have our high, and we have our massive drop. I think this is a low. Over here, our first low. Actually no, we got a low here already. Another low, another low, another low. So we have a very crazy drop. More lows here, and from this zone we aim it all the way down. That's 400, 500 pips, 600 pips. Yeah, that's a very huge drop. This will definitely pique your interest. There's gotta be something here that's causing this massive drop. And we have significant level as well. Tested this level 2 times. So let's go down to this level. And let's look for a supply zone or something like that. Let's go in. So we have our 1R. We have our 2R. Aha, now we're seeing something. There's not only a 2R, in fact, we have a 3R here. Now, do you still remember how the MPL works? We have a high, we have a drop, we have some resistance, we want a spike above this previous high before a significant drop. What do we see here? We drop below, and after that we have a spike above, and we have a significant drop, and it went all the way down. This is our H1. So now this area is my area of interest. So imagine earlier, if we looked at this level, we want to short, our stop loss would be about 30 pips odd. We minimized our risk and we shrank it down to about 13 pips, which is very good. So let's see what happens on an even lower time frame. Now let's take a look at this area. Immediately what catches my eye is that we have a support here, and after that we have a break, then we have a resistance, came down, spike up again, and then we have the massive drop. So this is our significant level. We have to pay attention to this area. Support, and we have our resistance. So let's check this out. Imagine we take this as our decision point. Earlier it was like a 13 pip stop loss. Now we managed to shrink it down to about 8 pips. If you are using normal broker, you're not using an ECM broker, maybe your spread is a little bit wider. We have our 8 pip stop loss. We expand it to about 10 or 11 pips, which is also very good. So imagine your stop loss. So this is our area of interest. Let's go back to H4. Remember earlier we have our zone that's about 30 pips wide. Now I managed to shrink it down to 10 pips, which is very beautiful, and I think that's good enough for me. 10 pips stop loss, guys. This is unbelievable. So let me just put this here. I'm going to remove the 3R. This is our high. So this is our significant level. So let's drag this all the way across. Now you're probably looking at where the zone triggered already. But if we were in the situation I would enter it, I would still wait for a little bit more price action. Remember our approach, the past, the process, and the approach. So let's look out on the chart. So let's look on the daily, for example. Do we have something significant? So we can spot a beautiful fake out here. This is our R1. This is our R2. This is our R3. So that is the process. Let's label this here the process. This is the past. So we have the process done, we have the past done. So let's give this a check. The past, the process. Now we want to look for the approach. So for the approach, what I want to see is a final fake out. Maybe we have a compression, maybe we have a small tree drive, rising wedge, falling wedge, ascending triangle. What else do we have? Can, or something like that. So our approach is also very important. So in this case, what we can see is roughly somewhere at this level. We have the final fake out as well. very nice. So let's go down to H4. We have some resistance here. We have another small resistance here. So maybe let's just move this up a little bit. Okay. So we have more resistance here. If you stretch this across, you have a support as well. You stretch this across, you see there's another resistance here. You have another support here. So this, I'll pass this off as an SR flip fake out. Let's go back to the daily. Zoom this in. We have our R1, we have our R2, we have our R3, and then we have the S. So in this case, we have a support, resistance, resistance, resistance. This is an SR flip fake out. SR flip. Beautiful. Let's put the process over here. And our approach, we have R1, we have R2. So the approach, done. So in this scenario, you will enter exactly at the zone. Your stop loss will be above 10 pips, of course. And our take profit target, can drag it down to somewhere here. That's about 760 pips. If you are ambitious, you can try to aim for this, 800 pips. Or if you look back, you might see more stuff. Maybe you go to the weekly, for example. You can try aiming for here as well, but I think that's a little bit too ambitious, right? So we have a significant level somewhere here. We have some support, 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 support. So that's our last TP. And this one, if you're lucky, it's like really just trying for it, but that's gonna be very difficult. Okay, so let's take a look at our entry. What do we have? We have our R2, we have our R3. Our last fake out over here. Final drive into our zone before dropping heavy. So if you zoom this in, price will be floating about 6 pips, yeah. Stop loss 10 pips, so we have about 4 pips to spare. So imagine you're floating 6 pips now. Your stop loss is 10 pips. We drop all the way 1,100 pips, thereabouts, 1,090 pips, thanks to COVID. So isn't that a crazy risk reward? We have a 10 pip stop loss, and we have a 1090. That's a very comfortable 1:100, I think. So I hope you guys learned a thing or two from this little setup today and my entire procedure to enter the trade. So if any questions, just put it in the comment section down below, and wish you guys profitable trading.